Of the day, I'm guessing. Okay, now we wanted to go to Sector Spotlight, which will be checking the temperature of the various ETFs, which we like to do, especially on a Monday, to give you the layout of the land here. Want to start with retail. I just roll my eyes with retail here. You know, sitting below its 200-day. You know, what's that next level of support? Because if I look at the top performers last week, they were the JCPenney's and they were the Best Buys. So then you have the ETF down so much.
Well, this indice has been under pressure, this ETF, and a lot of retail stocks. If you look here, I will show you again. I like to show you what you could have seen, so next time when we're in an uptrend, you know when to get out. This was that ascending channel, broke to the downside. We are now in a lower pivot in these RTHs. We're trying to hold this 200-day. I'd say 104 is an area. If we start breaking below 104, we're going to see 102 pretty quick, and it could go all the way down to 98 if the bigger lower levels come into play. But right now, this is your lower pivot. 105, 106 resistance, 104 support. That's the zone that I'm going to be watching very close.
And then what about the semiconductor, the SMH? You know, it was down a little bit on Friday, but not as much as the rest of the tech sector. Is that any positive sign there, in your opinion?
I just think that it's so oversold that it's been hard to get it to go lower. Intel, which has been a good barometer for it, has been coming in, and it's trying to hold. SMHs right now, you know, are actually through the 200-day. Okay, we're already through the Japanese crisis low. So right there, that's telling me that the SMHs are relatively weaker than some of the other groups. So that's something to watch. That shorts might push on those because they're weaker than the other ETFs or sectors.
And talking about oversold, I have to ask about the OIHs here. You know, getting killed, but oil's around $91. At some point, that's going to bring back demand because high oil was what everyone was paranoid about. We go to 91, 90, and then in the 80s, that's going to be a positive. So aren't we just way oversold here?
At some point, it'll be a positive. Right now, people see 90s for oil. It's not considered cheap. Remember, we talked about 88, 89 when it was about 100.
Heard 70 from the S&P technical strategist over the weekend.
Okay, well, that could happen too, but first we stop there. So maybe if we get into the 70s or the mid-80s, maybe the talk will be the consumer will have more cash in their pockets. But for right now, the OAHs have been controlled by this descending channel, and I've talked about it. And if the longer you stay below a descending trend line, the more bearish it gets. And we're coming in to this 200-day here again. We talked about we'll probably get there, and we're here, 140.60. Usually you get a small bounce off this area first, like we saw in the Qs and the Russell before, getting more pressure. So we'll see if this group, the OAHs, could hold them, and then we'll look at the stocks as the day unfolds.
All right, let's go to the transportation ETF, the IYT. So actually held up well on Friday, but I know that the chart looks pretty dismal. But I do want to point out that FedEx, which is about 10% of the ETF, reports on Wednesday. So you have to wonder what that's going to do to this ETF as a catalyst.
Well, anything that's highly weighted in an ETF, it'll definitely do something to it. If you look here, though, this is above the Japanese crisis low. This is above the 200-day. So maybe this is starting to see that oil prices can come down, and this is a group that once the market turns, you can go to. I primarily don't trade this group because it doesn't move the way I like to see it move, but for investors, you know, we'll have some stocks here if the market starts to get a firmer footing.
Usually as the transportation stocks go, the Dow goes. This is definitely a key one to keep your eye on. Let's round it out here with the XLF, up almost 1% on Friday. I feel like financials are caught between the rock and the hard place, right? They're cheap, but they're bad, basically. You know, a lot of people think the fundamentals bad, but they're really cheap. So let's take a look at the ETF.
What I want to show you with this ETF is this was controlled by that descending trend line that I said was bearish with the OAHs, and then I want to show you how it accelerated lower. This has been a problem spot for a year. Here's your high, lower high, descending channel here, and then look how it broke down. So if you take a more of a macro look, you will see that we're at a really big level on these XLFs. We're right around this 1460 area. If this if this doesn't hold, we should see around 1410, and then you have 1350, which is huge. But right now, it's trying to hold this lower pivot. It's trying really hard. So keep watching Goldman, keep watching J.P. Morgan for some clues. Bank of America, hopefully it stays above 10, because if it starts getting below 10, psychologically, they're going to think there's another round of selling these banks, which will not be good for the markets. All
right, so just the broad landscape here of the ETFs, it seems like we're heading lower, but there are some support areas coming up that you can watch out for to test.
Yes, I think the last few weeks we were saying we're heading lower, stay away.
Yeah.
Now we've gone lower, and we're at crucial areas that, for all the marbles, so to speak, will they hold for a bounce, or will it start to accelerate, and will volatility spike?
But don't buy yet. We're not at that point. Not even close.
Well, let's see if anything can go green today. I'm coming in flat. I'm looking to see if anything goes green for a trade. And if you did sell some of your macro longs up in the 1330 area or even into the excitement, maybe this is a tier 1, dip your foot in, but don't get too aggressive.
All right, and we'll be right back with your stock trades for this Monday. Stay tuned.